Hey everyone, welcome to another exciting personal finance video where I'm talking about things like gold and silver, investing, all that good stuff. Guys, if you're into that, please like this video, subscribe to my channel, and check out my website, My Road to Wealth and Freedom. Okay, guys, quick disclaimer, I'm not a financial advisor and I'm not offering financial advice of any kind, so please do your own research, consult with a financial advisor before making any investment decisions like buying things like gold or silver, following any of the strategies I discuss on this YouTube channel, and buying any sort of stocks or anything like that that I mentioned. Okay, do your own research, get your own financial advice. This is just for entertainment. Okay, guys, wow, so finally um, we're getting a lot of excitement in the market. Gold is just getting hammered. I think last I checked, spot was in the 1686 or something like that. 1686, so down quite significantly from the highs that we saw last August. Silver's getting hammered too. Not as bad though. I think it's around the 25 mark, for 25 and change, something like that. I guess these are at a favor right now, right? Precious metals have fallen at a favor. A couple reasons for that. I guess we're seeing the 10-year yield rise. I think it's around just under 1.6%. The last I checked, so that's kind of diminishing the appeal of precious metals. Although, given all the problems and everything that we've seen, I honestly cannot see a reason why gold and silver aren't trading a lot higher given all that's happened. They just passed 1.9 trillion in stimulus. Of course, I think the House has to vote on that on Tuesday or something like that, but still, like, the trillions and trillions that have been spent, it's just astonishing. How big this global debt bubble is, how much money printing there's been. I've said this time and time again, and there's a lot of like macro guys and gals on YouTube and have their own websites and all that. Like they understand this stuff a lot better than I do. So just go see what happens when governments print a lot of money, when debt balloons to astronomical proportions. We've never really seen this amount of debt ever. You have some investing legends. Jeremy Grantham's saying that this stock market could easily fall like 1929 or the year 2000. I think people kind of forget, even 2009, things really kind of went off the rails in September, and it kind of bottomed out in March. So that's kind of what, 6 months for the market to kind of go through its little corrective phase. Well, during the dot-com bubble, that blew up, I think, March of 2000, and it wasn't until kind of mid 2003 that stocks started looking up again. So you can go through these phases in the market where there's a big correction, and it takes it doesn't have to be a massive initial collapse. It might be 10-20%, and then it just sort of keeps falling from there. And it can take a couple years to basically shake everybody out of the market. I'm not really sure a lot of people are really prepared for that. So, yeah, anyway, as I always do, whenever I come up with like a financial plan, I'm always kind of second guessing myself. Maybe not second guessing, but like challenging my assumptions, challenging my thesis. Like, why am I doing the things that I'm doing? And of course, this year, if you guys have been following my blog at My Road to Wealth and Freedom, the link's in the description, or if you've been following this channel, then I've done something a little bit different this year. I've decided to basically become super, super conservative, a huge risk off move on my part, and do like the most conservative thing that I can possibly do, which is just simply stack cash and pay off my mortgage. I'm not investing heavily in stocks. I basically did that last year. In fact, I've been harvesting some of my profits and paying off my mortgage and stuff like that, because I really think either we're headed for massive deflation, because of the debt bubble, because of demographics. All the boomers retiring, people are going to need to live off of their investments. Pension funds are going to have to start paying things out. They're going to have to start drawing down. You can't live off of interest anymore. You know, you think you're going to live off of like 1%, I think it's like the best rate you can find out there, you know? Let's be, even if you can get 2%, I mean, that's a joke. What are you going to do? You know, my grandparents, they retired, interest rates were like 20% or 15%, something like that. I mean, you could have, you know, a couple hundred grand in the bank and live comfortably. Um, you know, today that's not the case, you know, on like a 1 or 2%. I mean, what do you need? You need a couple million, almost $3 million at the safe, you know, just kind of plain vanilla interest. You know, if you want to live off the dividends, you need about half that. You know, I think the average yield, you know, if you're going to go into like a dividend portfolio, you're probably looking at 3%. You're probably going to need like, my guess would be $2 million invested in these stocks, maybe 2.5 million. Same thing, right? Um, so I mean, you're taking a huge amount of risk with that too, right? It's like, you know, the stocks can fall um, quite dramatically, as we've seen, and you know, I think people really need to understand like what's going to happen when the Fed won't come to the rescue of the markets, or actually does, but nobody cares. They see the end, basically. They see where this is really headed, and they've lost. Markets are a huge confidence thing. You know, people say fiat currency and all that, that's built on confidence. Our whole financial system is built on confidence in that system, in our money, as in fiat currency. Um, you know, in our financial assets and stuff like that. I mean, if you know, right now, I think there are some chinks in that armor of you know, confidence, and people are slowly waking up to this. I don't think they really truly understand or grasp and see the writing on the wall. Um, but I've completely lost confidence in the whole system. I'm not even going to pretend. I'm just, you know, I want to pay off my mortgage. I want to, you know, hopefully we'll get a big market crash and I can maybe start taking advantage of that. You know, accumulate some more precious metals like gold and silver. That's kind of my approach, right? I guess I'm just more of a value type guy. You know, there's a lot of stuff that's happening right now. You know, we're at record levels in the stock market. I mean, it's the same old story. We've been hitting these peaks and the economy's dying, and we're seeing that come through in these numbers all the time, you know. Um, Retail has just been crushed, and that's a huge part of the economy. So, I don't really foresee good, and honestly, like governments can't float the boat forever. Sooner or later, it's going to have to come to an end at some point. I assume it's probably going to be fairly messy, and you definitely want to have some protection in the form of gold and silver. I'm not saying to put all your money in it. I don't even have 5% of my assets in this stuff. But at this stage, I think there's enough alarm bells ringing that, you know, 5% of somebody's net worth, or investable assets, to have something in something tangible that's real, like, you know, a few ounces of silver, a couple ounces of gold. I mean, at this stage, I think that's like a really smart thing to do, really prudent thing to do. Certainly, if you don't own any of it, I would for sure buy a little bit of it. I mean, you don't have to follow the herd, but I would say, you know, this isn't what's gold and silver. It aren't really the herd mentality right now. Even with the Wall Street silver and the Reddit and all that stuff going on, you know, um, that's not exactly the herd mentality. I think that's, you know, that's being safe, that's being prudent. Um, yeah, so that's my thing on that. So what I wanted to get to is I've been super conservative. I have one goal. I've paid the most I possibly can on my mortgage. I'm stacking cash right now, in a plain vanilla savings account to make a lump sum payment, another lump sum payment on my mortgage when I'm allowed to do so. So for now, you know, it's a few months away. It's not a huge deal. It's not like I'm waiting 5 years to do so or whatever. But that's what I'm doing, and you know, my risk, I guess. Hopefully, we don't get crazy inflation and a currency collapse and stuff in the next couple months. Somehow, I doubt it'll happen in the next few months. But I do want to get that done. And I was really wondering, like, it's obvious in a deflationary scenario, which is what freaks me out more than really a lot of inflation. Um, is that, people do really lose a lot. They lose everything. And if you have debt, you're just going to get killed. So, that's kind of the downside. Um, but interestingly enough, I haven't really read a whole lot of stuff about what happens during hyperinflation or just really high inflation. Not necessarily hyperinflation, but just like, maybe some double digit or low double digits, high single digit inflation, and what's happened. And I came across something on in the early 1920s in Weimar, Germany. There was that hyperinflation. And I want to know what happened to people who had mortgage, right? Because everybody, I know, I was talking to people this weekend, they're all buying cottages, they're all buying second homes, third homes, and the reason is simple. Money's never been this cheap. Never mind debt that you have to pay back or that you could be on the hook for if anything bad happens to you, if we face catastrophic losses in the stock market, or other investments go down, you lose your job. There's a million reasons why you shouldn't like over lever yourself, especially at record high real estate prices, stock prices, bond prices. Like, I mean, the insanity is everywhere. And when we're looking back on, hey, I wonder what were the signs when bubbles burst. I just saw this article in the Toronto Star over the weekend. A 20-foot wide city lot with a dilapidated, rundown garage where you park a car, sold after being on the market for, I don't know, 2 maybe 3 days, and the asking price was $729,000. $729,000 for a piece of junk garage on a 20-foot wide lot in Toronto. So, if ever we're looking for what were the signs that we were in a massive bubble, I would say, things that come to mind: the whole GameStop frenzy, the whole Tesla thing, the whole Bitcoin, all of these things. Oh, and by the way, when piece of crap garages started selling for nearly $1 million or $750,000, yeah, those are the types of signs that you see. But anyway, all these people, debt is just great. I'm being so smart. I have all this debt. It's just going to inflate away. Well, that's not necessarily the truth. Back in Germany in the early 20s, when they were hyperinflating, all of those mortgages denominated in fiat marks or Reich marks, whatever they were, what happened to that? Well, they didn't want the banks to take the losses on that. So what they did, they repriced the mortgages in terms of gold. And the consumer who had the mortgage was on the hook to pay the inflated value of that mortgage. So just another reason why paying off debt is the prudent, smart thing to do. And like I said, and I keep saying this over and over again, personal finance, it's really not rocket science. The people who have had the most success, just being the average everyday kind of millionaire, are people who've worked hard their whole lives. They've saved, they've invested prudently, and they were just cautious, right? They did the right thing. And that's kind of what I'm doing. I'm not saying I'm doing things right. There are people out there who get way better investment returns than I do. And for sure this year, everybody's going to probably do better than me. But something, I don't really care about that. If paying off my, I don't know, 2.5-3% mortgage, it's this whole sleep at night factor, right? Like, I don't want to be one of those people caught. And I think there's going to be a lot of pain and a lot of people who are just over leveraged, and they're going to be caught and they're going to be screwed. I wish that wasn't the case, but I think there's enough warning signs there. I'm hearing stuff about Uber drivers and taxi drivers talking up tech stocks and stuff like that. These are all classic signs of the like market peaks. And every analyst you'll see is always like, they always add in the caveat, bubbles can go on longer than we can, predict. Nobody wants to make a prediction. And that's the problem. When you're in sort of these bubbles, it's really hard, to say, oh yes, this was a bubble until it kind of bursts. That's their kind of standard line or whatever. but it's actually not all that. It's not all that. Oh, I completely didn't realize that. I mean, there's warning signs everywhere if you just kind of choose to pay attention. You can't tell me a piece of crap garage in Toronto is worth, $730,000. Yeah, like it's just ridiculous. Um, so anyway, those are my thoughts. I caught Peter Schiff's podcast. I don't know when it was, earlier last week. He was sort of talking about bubbles. Maybe it was the week before, something like that. And he was saying a lot of the same stuff. Like there's signs everywhere. It's obvious. No one knows when it's gonna pop. But the thing is you at the very least you want to start taking some chips off the table. You know, build a little bit of cash, buy some things that are out of favor. Gold's extremely out of favor compared to every other asset price. Um, Gold is I'm still thinking it's relatively cheap, Um, it's higher historically. It's not at its all-time peak or anything like that. It's still a little bit high compared to where it was a few years ago or even just last year or a year before or whatever. But if you don't own any, it's probably worthwhile having a little bit because honestly, you don't really know where this is going to end. And I feel like a lot of people are thinking Bitcoin is going to be the end all be all. It's going to save them. It's just look what's happening with Facebook and Google. There's a lot of regulatory scrutiny coming their way. Um, these things always don't really end well. So I'll just kind of leave it at that. I don't want to drag this video on too long. I know your time's important. So I do want to say this. Finally, I got it. My ounce, my Buffalo 2021 1 ounce gold Buffalo. So that makes two buffaloes and a bunch of maples. So I'm not sure what I got for ounces now. 2, 4, 6, 8, 10, 11 and a quarter straight bullion. Probably get another maybe 2 or 3 in collector coins. And I'm kind of good with this. It's not like right now my focus is I'm stacking cash to make that mortgage payment. Once I got that cash, then I might consider picking up another ounce or something like that. But as far as these videos go, I'm just going to be talking about personal finance, talking about my approach, talking about my plan, how I'm executing on that plan. And yeah, so unless the metals go down quite significantly, I'm literally just stacking cash to do the most boringest of things, just paying my mortgage off. And next year these videos will be a lot more exciting. Hopefully prices for financial assets will be considerably cheaper, and with all the extra cash flow that having a paid off home is going to throw my way, then I will be able to invest a lot. On a side note, I do still own a lot of my oil investments, and I am extremely pleased with their performance, and I've been kicking myself that I didn't buy more. I started dipping my toe in last September, buying a little bit, kept going down, buy a little bit more, kept going down, buy a little bit more. Finally, by the end of October, I was buying like quite a bit. And then all of a sudden, news of the vaccine and prices jumped. They were up, I don't know, maybe 20%, 30% or something like that instantly, literally. Because that's what's happening on the markets now. Like it's the kind of herd, right? Everybody rushes into whatever's the next hot investment theme or hot stock. It's really really tough to acquire a substantial position over time anymore. You have to really be quick, and you better have solid conviction. I thought, honestly, my thought last September was I probably had until the spring basically to accumulate my full position. I'm happy that I got most of it. But yeah, anyway, so, oil's done extremely well. I'm confident that even if the whole market, there's a huge drawdown or a huge, like what we saw back in March, just selling of everything, that oil's probably going to bounce back really quick, or it'll hold a lot more, like a considerable amount of value. So Anyways, guys, I hope you enjoyed this video. Happy to get my 2021 Buffalo finally. Um, keep the faith, guys. Good luck to y'all. And like this video, subscribe to my channel. Check out my website, My Road to Wealth and Freedom. Take care.